Now, the question on everybody's minds at the moment is the US stock market on fire or about to burn out? Let's take a look at what the numbers and many analysts are talking about right now. Now, today, the US stock market is currently valued at more than 220% of the entire US economy, if we look at it in terms of an earnings GDP ratio. That's one of the highest levels ever, and historically, when the ratio gets this high, we've often seen a market correction afterwards. Now, narrow it down a little bit. Let's look at the S&P. Now, the S&P 500 is trading near 30 times earnings, way above the long-term average of 15 to 20. Now, a high price earnings ratio indicates that investors have high expectations for future earnings growth, but of course it can also signal that the market is overvalued. And if we look at the Shiller CAPE ratio, CAPE ratio, which stands for the cyclically adjusted price earnings ratio, which looks at things over a slightly longer period of time, that is hovering near 40, as we can see. Now, that's very close to levels we last saw during the dot-com bubble, which is of course a concern. On top of that, investors are also borrowing heavily to buy stocks. Margin debt has pushed past $1 trillion US. And when people invest with borrowed money and trade on margin, any drop can trigger a chain reaction to forced selling. We know trading on margin does increase your risk slightly, so you need to be aware of that. And the final thing, and it's quite an important point really, is that most of the market's gains are being driven by just a handful of mega cap tech stocks. If even one of them cracks, the entire market could well shake. And we can see that, those are the household names we've been talking about for some time, and they really are driving the market forwards. Even the IMF is getting in on the act. Now, the IMF is currently warning the global stock markets, including the US, are overvalued and a risk of a sharp correction. Now, despite some weak economic data, these types of warnings, high enthusiasm for AI mega cap stocks has driven historic market concentration, creating risk if returns don't match these lofty valuations. So are we in the start of a perfect storm? High valuations, record leverage, narrow market leadership. This combination often shown up in the past right before major corrections. However, of course, nothing is set in stone. We could just be looking for patterns that perhaps aren't going to be repeated. But certainly there's a lot of talk in the market about all of these factors coming together at the same time.